Welcome to today's market report.
European stock markets opened higher on Wednesday, stabilizing after Tuesday's sharp sell-off, but investors remain cautious about the strength of the global recovery and the threat of the Delta COVID variant. Euro Stock 50 and the broader Stocks 600 index were both up by 0.5%. The OMX Copenhagen 20 and Germany's DAX led the way with gains of 1% and 0.7% respectively. Stock markets around the globe have been on a tear for much of the year, helped by successful vaccination programs and vast amounts of monetary and fiscal stimulus. However, this enthusiasm is showing signs of waning. All three major European indices dropped by around 1% on Tuesday, not helped by German zoo economic sentiment falling by much more than expected. Also, the broad-based S&P 500 broke a 7-day winning streak on Wall Street after the ISM non-manufacturing PMI, a key gauge of service sector activity, fell more than expected, raising worries that the US economy may be approaching a peak. Fears about the economic outlook were assuaged at least partly by some encouraging corporate updates. Royal Dutch Shell stock rose over 3% after the oil and gas giant said it will accelerate its program of returns to shareholders in the light of better cash flow. Italian payments firm Nexi hit an all-time high after its merger plan with Danish-based Nets received regulatory clearance, and a heavily weighted software giant SAP rose over 3.7% after Bank of America put it on its buy list with a price target of €150, some 25% above Tuesday's close. German industrial production fell 0.3% in May, a lot weaker than the 0.5% growth expected, and the UK house prices fell for the first time in 5 months, according to lender Halifax. However, most eyes will be on the release of Federal Reserve meeting minutes later on Wednesday. Oil prices stabilized on Wednesday after the previous session's wild ride, during which traders digested the failure of OPEC Plus and allies to agree a deal to boost production. This outcome initially resulted in sharp gains, with the NYMEX contract climbing to its highest in nearly 7 years. However, this enthusiasm quickly turned to concern that the spat between Saudi Arabia and the United Arab Emirates over future output levels could lead to a fresh fight for market share, in an echo of last year's price war. The US crude futures traded 0.9% higher at $74.07 per barrel after settling 2.4% lower on Tuesday, its sharpest loss in 3 weeks, while the Brent contract rose 0.8% to $75.11 per barrel after dropping 3.4% during the previous session. Gold futures rose 0.7% to $1,807.20 per ounce. On the FX front, GBP/USD is struggling to extend the rebound above 138 as the bull-bear tug-of-war extends ahead of the Fed minutes. The risk-off mood in the face of COVID concerns and pre-FOMC minutes anxiety keeps the bullish investors on the edge. The Euro-Sterling pair was slightly higher for the week after Boris Johnson updated the country on its 19th of July reopening. The Prime Minister has committed to the 19th of July date, but did not rule out a return of restrictions. The pair GBP/EUR is trading near 116.70 as the pair looks to make another push for the yearly highs at 118. The major currencies against the dollar print a 3-day downward trend as risk appetite soars and put a safe haven bid under the US dollar ahead of the key FOMC meeting minutes. For the cable pair, the 100-hourly moving average at 138.14 is seen challenging the recovery from Tuesday's lows of 137.73. Acceptance above the latter could revive the bullish interests, which could fuel a fresh upswing towards 138.40, a confluence of the 50 and the 200 HMAs. On the downside, a firm break below the rising trendline support at 137.95 could recall sellers, bringing Tuesday's low back in their sights. The euro traded at $118.20 after hitting a 3-month low of 118.06 during the previous session. After the release of the German zoo data, the dollar index inched down to 92.532.
This is today's market news. Thanks for listening. We'll see you next time.